What the heck is going on with the Fed? The Fed is a mess.
Yeah.
What is going on? I make sense of it, please.
Well, the good news is if you've been on this channel for the last 6 weeks or so, you've been hearing me say that the Fed's divided, right? I do think the Fed is divided into three camps. There's clearly a camp that wants to cut. There's clearly a camp that doesn't want to cut. And then there's a few members, not many, but a few kind of in the middle. And the reason I wanted to lead off with the Fed is a mess is their Fed minutes, which came out Wednesday, which is, again, you remember this, the Fed minutes come out 6 weeks after the last Fed meeting. So, I had been, I've been suspicious of the Fed just being a complete mess. And the Fed minutes just clearly articulated how divided they are. I've been reading Fed minutes for almost 30 years, and I have never seen a Fed minutes that were so divided. I mean, I don't know any other word to choose. So I think that divided Fed really does put a December rate cut in question. It doesn't seem, to me, the majority seem to want to pause. But here's the deal. There are 18 Fed members, but only 12 vote. And I haven't done the math on who's voting and who's not, because sometimes the loudest members actually don't have a vote, so it doesn't really matter. But yeah, the Fed's a mess. And, the December rate cut is, the market odds are one thing, but we'll get to that in a minute. But yeah, they're a mess. And yeah, it does. I don't think it's going to get any better anytime soon.
Something we need to keep an eye on. We'll talk more about it. Let's talk about job numbers. What did you see this week? And then also kind of coming out of the government shutdown. How does that, Bureau of Labor and Statistics, how does that all come together? What's your take on it this week?
Yeah, so we're just starting to get our first batch of government data. It was the jobs data that came out, and we actually got 2 of them. Weekly unemployment claims came in at 220,000, kind of right around expectations. Okay. I'm going to let the weekly ones go a little bit to really see where we are. However, we did get a jobs number, and I think a lot of people don't realize what it was. This was not the October jobs number. These were the September jobs numbers that they were sitting on for 6 weeks. And those jobs numbers showed that 119,000 jobs were gained, a plus, not a minus, a plus, much better than expected. I think expectations were 50. However, the unemployment rate went up from 4.3 to 4.4. Why is that important? Well, if you believe the Fed dot plot, 4.4 was kind of like the high water mark for the Fed. Mm-hmm. And oh, by the way, not to split hairs, but it was 4.44, which is almost rounding to 4.5, right? It was a hundredths away from rounding to 4.5. So, and then some of that's participation rate and things of that nature. But, the unemployment rate's the number, and, it went up again. Again, it continued the trend. Remember, these are September numbers. So we went from 4.2 to 4.3 and 4.3 to 4.4, and we're not getting October. So, I don't think they were very good numbers.
Very interesting times, right? You've been the guy that I think out of everybody who does anything YouTube news, real estate, financial news, you've been the guy that talks about jobs, jobs over inflation. Mm-hmm. And then now we're at this really odd crossroads. As we're wrapping up 25, talk about the delay, the Fed meeting, what's going to happen next? How do you see this playing out?
Yeah. So the Fed meeting is on the 9th and 10th, December 9th and 10th. I believe, I strongly believe that the Federal Reserve should delay that meeting. Why? Well, the important jobs numbers were supposed to come out on December 5th. They're now delayed, I think, to the 15th or the 16th. So after the Fed meeting. And if we've just got, a crap report at 4.4 for September, we don't get October, and then we don't get November until after the Fed meeting, what are we doing? You're completely flying blind.
Right.
There's no magic about the Fed meeting on the 9th and 10th. Get off your ass, delay the meeting and make a better informed decision. I don't understand why you want to go into perhaps the most important meeting with your hand tied behind your back. So I strongly believe the Fed should be a big boy and girl and delay the meeting a week. It's not like it's It's not like they got something else to do. Like, you guys meet once every 6 weeks, so you move it a week. Who cares? Shit gets delayed all the time. So I want the Fed to delay. I don't think they will. I don't think there's ever been a Fed meeting delayed. I'd have to go back and look, but nothing comes to mind.
That was going to be my question. Did Greenspan or Yellen, did we ever see this in recent history?
Not that I'm aware of. Certainly, okay. Yeah, not that I'm aware of, but it's something they should seriously think about doing, because I don't know how you go into the 9th and 10th with, no jobs data for, I don't know, what would essentially be 8 weeks and make a good decision. Plus, again, as I said right at the opening, the Fed's a mess. If you don't have, if you want a December rate cut, that jobs number needs to be weak, right? We need to go to 4.5 unemployment rate. We need to go, sub 50,000 creation. And if you don't have that, the Hawks are going to win. There'll be no cut in December.
Very interesting. Now, do you see where, again, no cut in December, and then they do an emergency meeting and a cut? I mean, is that going to be an alarmist? Is that even possible?
Well, yeah, certainly anything is possible. It would be a hugely bad look. It would be reactionary. It would probably send a wrong signal to the market and freak it out. It would be an unwise move, right?
Okay.
Roll into the 10th, say, hey, no cut, blah, 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 strong. A week later, we get a nasty number, and then they cut a week later. That would be
not good, right?
That'd be bad. Yeah, that would be that would lead to some problems. Yes.
Okay. All right. I'm just trying to play this all out.
Great question.
How do you see? So, what does the online betting people that, Wall Street, private equity, what are they saying? December rate cut, yay or nay? And what does Michael say? What do they say? What do you say?
That's a good question, because we're going to disagree on this one. So this morning, Christopher Williams, I think his name is, came out and basically said he's open to a rate cut. Thinks we should. And that really moved the needle, right? What's called the Fed watch as of this morning is now at 70%.
Okay.
Which, again, is, it's more than a coin flip, right? 70%, those are pretty high odds for a December rate cut. I'm actually going to come out and say no cut. Unless they delay. If they delay, like I hope and pray, maybe. But if they don't delay, I don't know how, with all the chatter I'm reading from, probably 6 or 7 Fed presidents, like Hammond, for example, and many like her, they don't want to cut. They do not want to cut in December. I'm convinced of that. And I'm going to say no cut, even though the Wall Street and the smart money says yes.
They say yes. Michael Zuber says no.
Yep.
So no delay. They say nay.
Yeah. Oh, look at you.
Okay.
Yes,
all right. Yes. Let's keep going, huh? I'm on a roll here.
You are. You got some coffee this morning. There we go.
Yeah, let's get it. All right. Consumer sentiment. What is it? What happened? How are you seeing? Also, too, let me throw in there also. Jamie Dimon's comments this week, you talked about in the Daily News about there's no way out of this. We've got to, inflate. We've got to allow inflation to do its thing.
Yeah, we
need to get out of this cycle. What is your take on consumer sentiment? And then comment on Jamie Dimon and then unwrap that if you can.
Yeah. So consumer sentiment, it's an important reading. Although I will say, I think it's becoming less important. And frankly, I think it's becoming inaccurate. So what is it first? Basically, it's a survey. And, there's a series of questions. You figure out what's going on with consumers. Why do we do this? Well, we're a consumer-based economy, and the consumer drives GDP. So basically, how consumers are feeling really can be a leading indicator to whether or not they're conserving or spending. That's the theory. And for decades, it was a pretty good indicator.
Yeah. I
am really starting to believe that a lot of these surveys are becoming completely inaccurate.
Yeah.
Because of social media and doom loops and all these, things. And I don't think I've really seen a leading indicator, a sentiment survey, really correlate with retail sales, which is actuals, right? Oh, I feel horrible, but I'm still spending like a drunken sailor, right? That's kind of been the trend the last 18 months or so. So I am really starting. I mean, if I was getting a PhD in economics, the thing that I would be studying right now is consumer sentiment. And basically my query would be, has it become an irrelevant or outdated survey, right? Or maybe it would be how to change it.
Yeah.
Because I think what we're seeing now is the people that take the time to respond to surveys don't have the general public perception. I think the data is just so off, right? Oh, everybody feels terrible, but oh my God, record spending on consumer goods, right? Those things don't normally correlate. And they've
Right.
been so off for so long. So I think consumer sentiment, it faithfully is an indicator that I'm less, I mean, I was really all over it for decades.
Yeah.
It's like, that's the one, right? I think it's a junk survey now, but just to keep going with it, because you never know. It's at 51, which is down 30 or 29% for the year. So the consumer is grouchy. But then you hear all these people spending record things on cruises and clothing. It just doesn't tie together for me.
Interesting too that I did hear something about cruises being already sold out, like 70-80% for next year.
Yeah, Vikings 70% for 2026. Like, gosh,
yeah,
man.
So crazy. And then you talk about, this is interesting too, because this I learned from you, the K-shaped economy. Some people are going up, some people are going down, bifurcated. And it's interesting. You go to a place like Walnut Creek, California, downtown, where the shopping, and it's busy. It's hard to find a parking spot. You go 30 miles east into the East Bay, and it's normal, and in some places really flat and slow. So definitely bifurcated. Talk about the Jamie Dimon piece just real quick. What's your take on what Jamie said this week?
So again, kind of set the stage, right? We're sitting, I think, at $38 trillion in national debt, and it's been only going up, and it seems to be accelerating. And, I have believed for a long time there's only three ways to solve it, right? One is inflation. Two is cutting, right? Stop spending. And third is raising taxes. I mean, the government debt is no different than your household debt, just with a lot more zeros. And there's nothing magic there, right? They can do those things. The one magic pill they have is they can turn on the money printer. And, raising taxes is not very good for an administration. You probably lose if you do that. Cutting spending, not likely. People are addicted to, whatever services are there. So I think the only logical answer is inflation, right? And that's why I've been talking for 5 or 6 years now that inflation's a feature, not a bug. And as soon as you understand that, right, you can rail against the machine, you can bitch and moan, but don't hate the game, right? Don't hate the player, hate the game. And inflation's a feature, not a bug. Invest like it. So, yeah, it's Jamie Dimon. I mean, I think it's not only Jamie Dimon; it's pretty much every economist, business person I know, kind of commiserates and goes, "Well, that's the only option that's going to work because the other two are non-starters." So, yeah,
very interesting times. Let's talk about Bitcoin. What did you see with Bitcoin, and what's your take on Bitcoin?
Well, again, I think Bitcoin, again, as I've said for years, I took 1% of my net worth in 2018 and invested in crypto, right? Bitcoin, Ethereum. So again, I think it's something that once you get to a certain asset base, you would be a fool not to have 1 or 2% of your net worth in it, because 1 or 2% is not going to mean anything if it goes to zero. I'm not saying it will. I'm just saying if. And also if it's a lottery ticket on the upside. So that's what I think of it. So I have real money invested in it. So I'm not a trader. I'm not a maxi. I'm just a guy that's like, hey, let's go buy an insurance policy on fiat. So that's what I did. But I just checked this morning, and I don't know what it is trading now because it trades 24/7, but it was threatening to break 80K, and it was just 126 like a minute ago.
Right.
And that's down, I don't know, 30%, 40%. So the thing that I'm always shocked. I don't know why I'm shocked, but I'm still always shocked. It's like, you guys haven't learned this lesson, is why there's so much leverage. I mean, because the whales can, wash you out so quickly, right? We're seeing hundreds and hundreds of billions of dollars in leverage being wiped out. And so it's interesting. But when I step back as an economist, as a business person, and I look at Bitcoin going from 126 to 80, I have to ask myself why.
Yeah.
And, and probably more importantly than why is this an early indicator of something bigger brewing? I think that's the big question, right? Because when I look at Bitcoin, my casual study of it for the last couple of years, it's where liquidity goes first and where liquidity leaves first. So if liquidity is leaving Bitcoin first and quickly, does that downdraft go somewhere else? Right? We saw a pretty big run on AI and tech stocks yesterday. Is that a follow through perhaps of Bitcoin? I don't know, but these are the questions I'm asking myself. And it can, Bitcoin could be the canary in the coal mine to something bigger, or it could just be foolish investors levering up and getting washed out, and it'll turn around and go higher. I don't know, but it definitely warrants following for sure.
Very interesting. I want to go to a question that we had from somebody had sent in a question, and they were basically, talking about with like, I want to actually connect the dots here too. Like, so with NVIDIA, with Michael Burry from the last episode last week, there was conversation and things about NVIDIA. There was a sell-off. The question basically tied into the AI component of the economy. Something I heard on the All In podcast, something I follow and listen to.
Yeah, me too.
Where they talked about basically if you removed all the AI investments out of the GDP, in essence, we would probably be in a recession.
Yeah, I would think that's true. Yes.
The infrastructure, the data centers, the chip manufacturers, if you took all of that out of the US economy, the utility portions of it, in terms of CapEx for utilities.
Yeah.
If you remove that, what is your take on what's going on with this AI? Are we in a bubble? What you, Michael Zuber, personally, what do you see as a guy that's looking at all of this all the time?
So I have experience with what the .com era was. And again, I was, my wife, Olivia, worked at Cisco Systems, right? Which again, NVIDIA to me is Cisco, 2 decades later or whatever it is, because why is NVIDIA winning? Because they're selling picks and shovels. Right. Why did Cisco win? They sold picks and shovels. So again, when you're the only game in town, and NVIDIA to date has 90% market share, which is crazy for AI chips. They're just selling picks and shovels. And right now, everybody's in a race to buy picks and shovels. The question, and I think it's a decent question, is can these drunken sailors get a return on their, $1 trillion investments before they have to do it again? And what do I mean by that? Right? There's, Michael Burry's point was, hey, all of these investments used to have a 3-year life. Now they're 6. So are they playing with the books by lowering expenses, right? You cut expenses in half, your earnings per share look better. It's just math. And, the question is the life cycle really a year and a half, not 6, not 3, a year and a half, right? And if Meta, Amazon, Alphabet, all these hyperscalers, they have to go back to NVIDIA in a year and a half or 2 and buy the next new widget, the next new chip, they will never get the investment return on the first $100 billion they invested. And that's a problem. Not to mention, at least in the United States, it doesn't seem like we have the energy infrastructure to power all of these freaking things, right? That's why, it's like, yeah, you could sell them, but if I can't turn them on, what good are they? Right. So there's a whole bunch of power constraints and issues and things of that nature. Is it a bubble? I mean, is it a bubble? I mean, Michael Burry says yes. Michael Burry said yesterday we're 80% of the way there. It's certainly richly valued for sure. I think Jensen Huang said AI is everywhere, doing everything all at once. Talking his own book.
Sure.
I just don't know. I don't know. I don't think we really know. Well, I don't think we really know what AI is going to do, because I don't see anybody making money with AI, right? Other than maybe OpenAI. But is Google really making any money with Gemini? Is Twitter making any money with Grok? I mean, I don't know yet. It
feels really early, right? And also too, is there anything else? And the question was very specific about the Mag 7. You take the Mag 7 out, are we in a recession? So is the rest of the world, is the Mag 7 thriving with all of this over indexing of trillions of dollars and all this cap going into into AI, into kind of the Mag 7, and that the rest of the
Yeah.
country's in a recession, or just
Uh,
anything else that you want to unpack on
so,
that question?
yeah. So I'm going to say no.
Okay.
Because I think I've read decent earnings this week from retailers and the like. And again, I'm not saying the economy is booming by any means, but is it negative GDP? I don't think so. I don't think
Okay.
the U.S. is there yet. Although we got to watch the holiday season, right? The holiday season is the make or break for a lot of companies, and we're in it right now. But yeah, I think if you take out, the Mag 7, maybe the Mag 10, right, the big ones, and we look at everybody else, it's certainly not a booming economy.
Okay.
But I really don't think it's negative either.
Okay. All right. Well, we'll keep it going. Thank
Yeah,
you, Michael. I took you on a little detour.
that was good.
Let's talk about existing home sales. What did you see this week? But also, how do you see the year finishing, plus or minus 4 million, and then maybe even give us a little teaser of what you think in 26.
Yeah. So the first thing I'm going to pat myself on the back. I went out on a limb and called August the bottom for transactions. And as of right now, that call is looking amazing. Amazing.
Nailed it.
Nailed it. I mean, that was a crazy call to call the month bottom. Woo,
you always do, by the way.
I'm going
to
celebrate that one.
Yeah.
But existing home sales for October were up again, right? Called the bottom in August, up. They were 4.1 last time. They were 4.06. So again, not crazy, but up nonetheless. And again, we've got pending home sales up. We've got, mortgage apps up. I mean, it's not, I'm not here to tell you it's booming. I'm just telling you we're off the bottom. Right. And that should feel good. If you look at my 50-year spreadsheet, you can realize it might take us 5-7 years to get back to normal. But damn it, we're not getting worse. And sometimes you got to take the small wins.
Amen.
And so, and again, for those crashing, housing crash, idiots that were calling for a 9% crash in 2025, we were actually up 2.3%. There's no way we get there, right? There's no bloodbath in housing. In fact, the bloodbath was transactions, and now that's getting better, as I called. So again, just the frauds and the evil people out there speaking nonsense. Wrong again. Not surprised, they've been wrong for so long. But so now let's talk 2026. So we'll talk again transactions and price, because they're very different, even though a lot of people want to conflate them. I think it was Redfin this week came out and said that they expect home sales to be up 14% next year.
Wow. Okay.
And I commented on their post on X. I said, I'll take the under. I think 14% is aggressive. It's aggressive. I'm in the camp of more like 5 to 8%. So almost half, right? I'd be half of what Redfin said. And again, that's not making it worse. That's better, right? So again, if we use 4 million as the number, that means we're going to do 4.2, right? At 5% growth. And again, why is that? Why should that feel good? Guys, you lost 60% of your competition. Right? 60% of the competition's gone. So, you go up 5%, 7%. For some of you, dude, some of you are going to have your best year ever.
Yep.
Think about that.
Yeah.
You're going to have your best year ever because there's no competition. You should be 100%. Ecstatic, clean up. But, the last point is you don't deserve to take this winter recess.
No.
Right? A lot of real estate agents and brokers take off between Thanksgiving and Christmas for whatever reason. Sorry, you don't deserve that. It's been a shit year. Go build your pipeline for Q1, right?
Amen.
Go make 2026 an amazing year, and then take a 5-star trip next December. But nobody deserves a trip this year. Don't tell you. No, sorry. Get to work.
Agreed. No, so spot on. I mean, so spot on. So you're 4.2 basically, plus or minus 4.2 in 26. Mm-hmm. Not 10, 14% like Redfin and NAR. NAR is calling for a really, I think a big number like that, but they're talking their own book.
Yeah.
Right?
And then it's for price. I think what you'll see, and I called this years ago. I said years ago that the next 3 to 5 years will be, between 0 and 2%.
Yep.
And frankly, I hope that continues.
Yep.
Right. The only way out of this affordability crisis is prices flat, rates down, and wages up. And unfortunately, that is the slow recipe to fix this.
Yeah.
It's the same recipe we had from 1982 to 1994. And I don't
Yep.
know why people don't realize that's probably going to be what we do again.
Spot on, man. Spot on. I love it. I'm glad I'm with you, man. Thank you for
You're
all the
welcome.
work you do. Let's talk about, man, let's finish strong. Opportunity, the school community, 500 celebration, the ORaaT event in February. I can't wait to see everybody excited to celebrate. Talk about what's going on with school first.
Well, let's do opportunity first.
Okay.
So I don't want you ever to forget that between Halloween and New Year's Day, Olivia and I have closed 60% of our transactions. 60. We're there. And just like I, slapped you on the butt saying, don't take your vacation, investors, use this to your advantage. Everybody's going to look up and take their eye off the ball. Don't do that. You have some people that need to close this year. Go get that crazy discount. Go get that seller financing. Go get rate buy downs. Go get that amazing deal. Again, we're in a buyer's market. And now we're in a buyer's market in the winter.
Right.
And in the winter, in the holidays. Right? This is the time to go nuts and go crazy with offers and follow up. Go get the deal of the decade, the deal of a lifetime. This is the time. This is not the time to relax. Right? Yeah. I see so many people take their eye off the ball when Thanksgiving rolls around and then they don't look up again until, Valentine's Day. I'm like, what are you guys doing? Why are you like everybody else? Right? Be different. So that's my first thing, opportunity. The 500 ORaaT event, school, which you can see on the screen, was frankly a number that I never imagined. Right? I don't have a team. I don't market. I don't run ads. I just try to give, and it's working. We've got a community now. I checked this morning, 503 wealth builders, and the beauty of the group is there are 503 people going the same direction. Yes. They might be at a different place. They might be going at a different pace, but we're all going the same direction. And there's power in that. And then, it's been about a year. Now we have 9 accountability groups, which again, I never attend, but that's not the point. There are 9 go-givers talking about, out-of-state investing, Gen Z, ladies of ORaaT, brokers, all these other amazing things. So again, there is a wealth builder out there just like you. Right? Go find new friends. Go get around other people. Then we've got all the free education, the active forums, and the fact that it's 67 pennies a day. I was with Graham Stephan on Wednesday recording a show.
Nice.
And he's like, Zuber, you should raise that price. I'm like, guys, why does everybody want to make it about money?
Yeah.
Right? I'm okay Legacy. At $20. Yeah. I'm playing Legacy. God damn. And I just it'll be interesting to see where it goes. I mean, 500 is amazing. Could we do 600? I don't know. Could we do 1,000? I don't know. But we're going to find out, I guess. So it was pretty cool. And then the Vegas event, the family reunion, we still have less than 100 tickets available. There's not been a lot of ticket sales lately, which means I'm not talking about it for some reason. But yeah, there's only less than 100 tickets left. You better book your tickets. Vegas is on sale, so get your flights and hotel rooms now. Because as we get closer, and again, once these tickets are gone, I can't help you. Right, the venue is packed. I can't add anybody. It's not like I can just drop a wall and add another 50 people. If you've been there the last 2 years, it's limited capacity. So again, do that. The other thing is I opened 20 spot for teenagers.
Yes, very cool.
Yeah, something I did last year. So if you have a kid, and again, if they're 12, as long as you, like, somebody reached out to me, I think they said they had a 6 or a 7-year-old that wanted to come. I'm like, hey, as long as they behave, go nuts, bring them. And I'm trying to impact the other, generation. So I'm all for it. Don't need to buy them a ticket. I do need to know they're coming because I have to buy the food. So, don't surprise me. I want to make sure everybody's got food. But yeah, I think I opened 20 spots. I think we got 9 now gone. We might be 10. Let's say 9. So we got 11 more spots. Let me know if you want your kid to come with you. I'd love to see him. We did this for the first time last year. We do it again this year. So, 20 free spots for kids. So let me know.
I love it, man. So many good things going on, folks. Get involved with school. We did a Zoom call with Jason Pritchard on Wednesday. Yeah. It was so much fun. I had 2 pages of notes just from the conversation, and such a wealth of knowledge. You have Jason Pritchard coming on Sunday, right? For the school.
I'm
community.
trying. We haven't confirmed yet. We're
Okay.
trying. Yeah. Well,
So
if not, we'll do
Jason-
it the following Sunday.
Jason's going to come back sometime soon.
Yep.
The next couple of weeks, this week, next couple of weeks, sometime soon. He's going to break down exactly what he does to build lists in Property Radar, how he target markets. He spends over $100,000 a month, I believe, in marketing.
Yeah, and marketing.
So this guy is a scientist when it comes to data, having the right focus, you know, in terms of target marketing. Folks, you want to be involved with the school community. Get involved. You can buy your tickets at Eventbrite for the February event. Michael, thank you for all that you do. Have a great weekend, brother.
You got it, bud. Take care. Thanks, family. Thanks for coming Wednesday and being part of the 500 celebration. It meant a lot.
I had fun. Thank you.